Welcome to Silicon Valley Asian Business Talk.
Hello, everyone. Actually, I'm Roger Chen from the University of San Francisco and also the Center for Business Studies and Innovation in Asia Pacific, and short for USF CBSI Asia Pacific. So, Alfred, would you please, first of all, I want to thank you for supporting us to join this program. And would you please briefly introduce yourself?
Thank you, Roger. Thank you for inviting me. And this is my honor, and really it's a privilege to be here today. And thanks Heister and thanks Tai to actually have me speak today. I think the last time I actually spoke at a Heister event was maybe 22 years ago, which Heister was just founded. I think I went to a dinner in Cupertino, and I spoke at the dinner. It was very well attended, and so I have extremely fond memories, and it's been a long time. And so thankful to be back. So I was born in Hong Kong, and I was graduated from the University of San Francisco with a computer science degree. And then I went to UC Davis for my graduate studies. And then I got my master's degree from them. And then halfway through my PhD program, I quit and I went to work for Sun. I was at Sun for about just under 9 years. And I founded my own company called BEA Systems. BEA was a very successful venture. So we went public in 4 years and pivoted the company into the web space in the late 90s and reached $58 billion market cap, and eventually got to just under $2 billion in revenue and sold to Oracle for $9 billion, just under $9 billion during the financial crisis. And then I've done other companies and been very active in investing in the early stage company for the past decade plus. And so about 5 years ago, I started a firm with two other partners focusing on seed stage investment in infrastructure technology. So that's what I've been very focused on in the past few years. I'm having a grand time. This is like 2000 all over again for this AI era. So very thankful to be here. Yeah.
How to pitch to VCs about opportunity size and valuation.
Framework or mental models when you look at both an entrepreneur and investor, when you look at different opportunities both in business or as investors in startups. How do you tell which opportunities go? How do you tell the shelf life of good ideas and also how sustainable that business will potentially be? And part of my reason of asking that question is I just read that you guys were pretty active in crypto, many VCs were, and now like suddenly everybody pivoted to AI as one of the AI first investors.
Very extremely good question. I think to answer your first part of your question first, right? You have to think big. So this is one of the model sin that VCs talk about all the time that entrepreneur hates, right? Everybody coming to pitch, the first thing they ask you is, how big is your TAM, right? Total addressable market. And and it almost like pouring cold water into the founder, because the founder said, well, I just invented fire. And you're all of a sudden asking me how big this fire would be. How do I know? I haven't lit up the forest yet. How do I know how big it is? And it's fair. But that's how I can normally think of stuff. So whatever that I get pitched, I say, well, within the context of the re-engineering, let's say in this case of all the application in the world, now we have a neural network that we can put into, AI we can put into. How big is the opportunity really, right? So then you have to now realistically slice it off to say, what's a near-term opportunity? What's a long-term opportunity? I think that's like something that I have to do. Otherwise, you can't put things in context. The other thing is, because you have to price the deal, right? Somebody come in to raise money. So are you selling me 10% of the company or 20% of the company at what? At 10 million, 15 million, 20 million, 30 million? How do you size that? Why some company are worth so much off the bat, right? We're seeing some AI company have really crazy post-money valuation. Why is that the case? Because that hypothetical size is very big, right? That's how people price it. So I think it's important. So the more you can articulate that, of what the thing big would be, that's, I think, is one crucial thing.
Our involvement in and view on crypto.
Now, the second part of the question was a good one. I now it's escaped my mind. What was that again?
Just some ideas or overhyped?
Yeah. Oh, crypto. Very, very good question about crypto. Let me answer that straight up. Actually, the genesis of me founding this firm was I found two partners that were they were the first investor in Solana at 4 cents a token. So Solana at the peak went to $200 a token. Right now, I think it's trading at 160. Talk about a jackpot, okay? So those are the people immediately say, I want them to be my partner, okay? So because I like to have one of those too. And I tell you why I was interested in crypto was actually a little different from most people. Because when I was just about to be done with my journey at BEA, I knew the cloud was coming. Because the onboarding, the creation time of an application was too slow. And the cost, because the barrier to entry was very high, right? So you have to find a place that has a raised floor, you have to buy a rack, you have to have, expensive computer, you need storage, right? You need cooling of the computer, you need all kinds of stuff. And Cisco routers, all kinds of things. The cloud eliminated all that. Now I think the cost of $15,000, I think is that average number, to be able to basically create a product. Very cheap, very low barrier to entry. We needed to get there. So, but I never imagined it would end up to be like free cloud providers dominating the world, right? It's not what people imagine. You're decentralizing computing. It's not going to like free providers. This is like the early days of IBM. That's almost wrong, right? And look at what happened. It hampered the world, right? Everything became very expensive. So when Amazon was the monopoly of the whole thing, how expensive things were, everybody was complaining, you cannot get compute. It was too expensive. Now we're back to the same game again. So what would be the solution? Obviously, the solution would be to decentralize it, to get to edge computing. So the Web3 philosophy was to enable that to happen. But the problem with the Web3 was they really had something that was magical, which is something I've been thinking about very, very much when I was at BEA. How do you incentivize a developer to develop an application on your platform? They have the perfect solution. I rebate back part of my token back to you, right? So you make the economics work. The problem is there were no guardrails. So all of the speculator comes in and trade the token instead of people really were building stuff on top of it. So the whole entire thing became a mess and we're just trading random stuff. So with a speculator coming in, check up the token price to the moon, and then they all left, right? And then now what happened? It kills the project. So there's no chance for the project anymore, even though it was the right thing to do. So I think crypto gone through that journey. Every 4 years, actually I think the cycle is more like 3 years. They come, they die, they come and die, because this is the debate, right? Should you regulate this? But then by default, the whole point is not to regulate this, right? It's decentralization. But we never have an answer. And then now the problem is, people giving up that this will be where it needs to be. We still do some stuff, but they're not, like there's no fundamental things left anymore. So we put all our focus on stuff that's, my thing right now is much more important, is put the neural network into the applications and make us, much more effective. So then naturally we just pivoted back into like what core space needed to be, right? And we temporarily, I think, tabled this dream of decentralizing the computing field. It doesn't mean the need has gone. I think we need to recycle. We talked about this energy problem, right? How many people have their computer on, sitting on their desk when they go to sleep? It's a crime. Like, let alone I think the data center scares you. How many computers, 90% are sitting idle, right? It's just fundamentally wrong. But if we were able to implement Web3 all the way, we would have been able to recycle all of that. But edge computing would happen. But we didn't do it, right? Doesn't mean that it won't come. Maybe the timing is not there yet. Timing is crucial.
Thank you for watching.